Welcome back to the channel, guys. This video is where I go over all the trades I did for the week. I didn't do too many this week, but there's definitely a lot of stuff that happened in this very short week with minimal trades. So let's go ahead and jump right on into this one. So this week, the quote I decided to make is, choose your battles, don't fight the trend. And you'll see what I mean by that when we get to Tesla. That was quite the crazy turnaround. If you remember from before, I sold some 900 calls against Tesla, and well, if you're paying any attention to the stock market, you know what Tesla did. So first off, here are my daily close snapshots. Monday and Tuesday were positive days for me. Wednesday was a really red day. That's actually mostly because Visa dipped pretty hard. At the same time, I think KNB went down. So some lead positions, when things go wrong against those, because they're leveraged, you lose pretty quickly on those. Thursday was an up day, and Friday was pretty flat. Overall, my net lick is up $100 for the week, so yay. But let's go ahead and talk about Tesla for a second. So for my thumbnail, very clickbaity thumbnail, you can see that I had an option contract that lost about $33,000. Now what I wanted to do is show you that just because someone shows a big loss or gain doesn't mean that's actually what happened to their account. I also had bought some calls, so that was actually a call spread. And whereas I lost money on that short call, I actually made money on the long call. So I ended up with a positive play overall. Looking at this week's trades, well, first off, you see I had a newsy dividend last week. And so that hit the account this week, and I have drip turned on. So that bought 3 more shares of Newsy. So every month that I get paid a dividend on Newsy, my income from Newsy goes up about 60 cents because I'm buying 3 shares from that drip. So that's pretty cool. I like that with Newsy. Tesla here, this is one of those examples where it just shows that having more money in the game makes it easier. You have more options available to you. So what I did on this play is when Tesla hit 1,000, I saw a lot of strong bullish momentum and volume picking up. I thought Tesla was going to continue going up for the short term. So I immediately closed my short call and realized a loss of $33,557. Like, whew, that's crazy. And then I let my long call stay on a little longer because Tesla was making a big move at that point. It moved up, I think, like another $8. And I was able to close my long call for 123. Had I waited longer, later in the week, Tesla actually went up to almost 1,100. And that would have been a pretty big gain if I just left that on. But at the same time, position sizing wise, this was probably not the best move for me. I probably should have closed 2 of these contracts. I could have left 1 on to see what would happen, and even that was a lot of premium to have on a long call for a short term option here on Tesla. So, short story is I closed the short, let the long run a little bit, exited with an overall profit of like, what is that, $400. So I got out with a profit, even though I was completely wrong on Tesla, and that's because I have options with options, and that's pretty cool. Another thing I did that I don't normally do is I was trying to get a little fancy, and I sold a bull put spread on PTON. It went down quite a bit. I thought I could get a little sneaky and sell like 90-89 spread. I put on 5 of those to collect about $100, and PTON dropped on Thursday. I decided to cut my losses and get out. In hindsight, PTON went back up, so this would have been a profitable trade. But it just goes to show that like these short-dated contracts are not my best thing. And I mismanaged this trade because I'm just not used to doing those shorter DTE contracts. So just find what you're good at and just stick with it. There's no reason to go off that path. I also closed a Kroger 36 put. Want to take some risk off. At this time, Netflix is starting to run against me a little bit. Netflix seems to be on a tear. It's up to what, 680 now. Remember, I have some call spreads at the 700 mark that I thought were gonna be easy money, and now Netflix just keeps going up. And to be honest, I'm not really sure why. So anyway, I closed Kroger, locking a little gain there. And I also closed PTON the next day. I already mentioned this, so I end up losing 182. I saved about 240 because my max loss was about 500 off this, or 400, because I collected almost $100 in premium. So max loss was about 400. I realized about 180 here, so I saved about 420. And then I also saw that there was some extrinsic value in the calls for Virgin Galactic. So Virgin Galactic was trading at 1830. I decided to pick up 1,000 shares at 1830 and sell an in-the-money call expiring in 2 days for 53 cents credit. Essentially, what I was okay with doing on this position was picking up Virgin Galactic at $18, and by selling the call, if Virgin Galactic went back below $18 by expiration, my cost basis would have been $17.80, which is even better than the price I was currently trading at. So if Virgin Galactic went below 18, I would still have 1,000 shares and I'd be selling covered calls. But it turns out Virgin Galactic stayed above 18, so my sold calls should be exercised. I should lose the shares come tomorrow. And overall, it came out with a profit. So I'm going to lose about $310 from the shares because I bought at $18.30 and I'm selling at $1,800. So $30 per share. I did 10 of those, so that's where you get that $310 from. But then I also made $53 per share from selling the call. And when you add those up, this play is a $213 gain just from capturing that extrinsic value in 3 days. I think that comes out to like a 1.2% return on the money used to secure this trade. So that's pretty cool. And that's excluded if you want to calculate it through margin. Some other things that I had happen is I let my KMB covered call expire worthless this week. So that's $344 in my pocket. And same thing with Workhorse. Again, these are things I don't normally do. How often have you seen me let something expire? That's probably, I'm still probably under like 10 total over my options career. Like I almost always close my trades before the last day of expiration. But these guys I thought were really safe, and I went ahead and let them expire. There are also positions that I would have been fine if they were exercised. It's like Workhorse at $6 would have been awesome. And KMB, if KMB got up to 137, I could be assigned these short shares on it. And then I would exercise my leaps to cover that because these were part of a poor man's covered call. So in these cases, like the worst case scenario, I was okay with if stuff happened after the market closed. Overall, I realized $868.21. Here's a snapshot of my logs because I know some people like seeing this. And yeah, I've been kind of lazy in putting my trades in one leg or one row here now. I'm tired of putting them into 2 rows. My updated version of the spreadsheet I'm working on is going to allow you to have up to 4 legs per trade. So I'm trying to get that out. I hope to get that out by the end of the year, if not late November. And then here's my current positions. As we know, Virgin Galactic is going to go ahead and go bye-bye this weekend. Unfortunately, it would have been better just to hold the shares and then sell them because, the covered calls ended up capping my gains from the shares. So instead, I'm realizing a loss on the shares here and getting a gain from the call that I sold because this would be expiring worthless. Or actually, I still keep the premium is how this works anyway. One thing I need to remember about this is I have this realized loss in Virgin Galactic now. So I want to try to avoid buying Virgin Galactic. I think it's for 30 days so I don't trigger a wash rule. I have to look up what that actual timeline is that you need to avoid buying back into the security. And that's kind of interesting because I have some Virgin Galactic puts that are near the money. So if this expires in the money, what I end up doing this on this guy is rolling it so that I don't offset that tax advantage from losing on the Virgin Galactic shares here. I don't want to be buying back into the equity there. Other things to look at, Netflix is on the tear. So here this call spread that was at 70 or 80% profit at one point is now sitting at a negative here. That's my own fault for being greedy and not closing out when it had a pretty good gain. I still think, or I hope, that this is going to be a good trade in the end. It's still got 20 days to sit there and wait for Netflix to pull back, hopefully. We'll see what happens. I may think about selling a put spread to recoup some losses here if Netflix does continue going up. Visa here, I still have my bullish zebra on, and you can see that's going against me. Visa's just been falling down. It's down about $21 since I put this on. I put this on back when Visa was at $230. So I'd expect to be down about $2,000 because it's moved $20 against me. And there you can see it's $18.30. What I need for a break even would be Visa to get back up to $230. But this is also the one that I'm just waiting to get a $1,000 profit from. So got plenty of time for this guy to run its course. With all that said, here's the final snapshot where you can see my close at last week Friday and this week Friday. So you can see I'm up $100. Again, my maintenance is still sitting around $32,000, and my unrealized went up a little bit, and that's because Visa and KMB went against me quite a bit. I hope you guys had a pretty good week. Have a happy Halloween, stay safe, and see you guys Sunday when I release my top 3 option plays for the next week.